Your large-sized one, this one, nearly 1,700 crores. Anchor investors already tied up. That one opens. The big numbers that just came through about 5 minutes back were from Bharti. So let's get you some analysis on that. Ramakrishna Maruvara of Daiwa Capital joins in to talk about that. Ram, hi. What did you make of the numbers? Because the observation seems to be while revenues are sluggish, operationally it's been a strong quarter for Bharti.
Good morning, first of all, and I would tend to concur with that assessment. And I just had a minute to look into the numbers. Looks like the miss really is on the taxes front of it. If I were to look at the operational numbers, revenues are 1% below what the street is looking for. But the makeup of it, I think the difference is coming in mostly on the African side of the business, where we know there have been issues on the Nigerian part of it, primarily due to the strike. Looking at the margins have improved 1 percentage point quarter on quarter for the overall group. The Indian margin again has improved, and that means the issues that we had in the third quarter of this financial year, primarily on the enterprise side, is slightly behind us. But again, I think it's the taxes which seems to have caused the big miss. Still yet to look into what's been driving this number, I would say.
Ram, hi.
Okay, Ram, I think we'll have to wrap it up there because the Bharti top team is just getting ready to speak.
Warm welcome to our presentation of the results for the last quarter and the full year for financial year 2011-12. I think before I talk about the full year, let me just very briefly touch upon the last quarter, while of course Manoj and Sanjay will take you through in more detail about their respective geographies. Let me say this was, from our point of view, a good and a very satisfactory quarter. In India, we got the growth back. Some of you might remember in the previous quarter, we had a low growth of just about 1.2 billion minutes. The last quarter, we were able to increase that manyfold. We had almost 11.5 billion minutes added on our network in India. So the growth is back. I think some of the rate adjustments which we did, we were able to correct. So we are back on track. As far as Africa is concerned, I'm glad to report that the upward trajectory continues, both in terms of revenues, EBITDAs, and the overall operational performance. But let me talk to you about the full year. As you know, this was a pretty mixed year. Let me first talk about the performance, and then I'll talk a little more about some of the major things that happened during the year. Our consolidated revenue was at 71,500 crore approximately. That was a 20% year-on-year growth. The EBITDA was just under 24,000 crores. That's about 18% year-on-year growth. We incurred capex of about $2.8 billion US. That's about 13,500 crores between India and Africa. We have, as on 31st March, total investment of over 178,000 crores across our operations, of which a whopping 110,000 crores is in India alone. So this is a sector where we have made very, very large investments. We do approximately 3 billion minutes per day. We are, as you know, the 5th largest telecom operator globally in terms of the number of customers. Our total customer base exceeded 250 million. We were at close to about 252 million as at the end of the period. We had our leverage, as you know, we had taken the debt for Africa acquisition. I'm really pleased to note that the leverage has come down quite significantly during the year, from 2.95, that is net debt to EBITDA, down to a very manageable, very comfortable 2.56. We launched 3G on a large scale in India and also on a large scale in Africa during the year. We also launched, as you know, 4G, first to launch TD-LTE network in India last month. We have launched now Airtel Money, which is really a beginning of a major thrust on the m-commerce, both in India and in Africa. So overall a good performance. However, as you can expect, the full impact of the interest and the amortization of the large license fees which were paid on 3G have dragged down the net profit from over 6,000 crores last year to just about 4,260 crores. Coming to India and South Asia, you know this has been a year of massive challenges, But I'm glad that despite all the confusion in the marketplace, on the regulatory side, we were able to achieve a revenue growth in double digits. Our customer base in India is now just shy of 200 million. As on date, of course, it would have exceeded that. And we do roughly about 2.5 billion minutes every day. In Africa, our revenues during the year grew to 4.14 billion US dollars, up from 2.88 billion in the previous year. Let me remind you, the previous year, of course, was 70 days short because we started the operations from 10th June. But even after adjusting for that, we grew at about 33% in terms of revenue. Our EBITDA exceeded 1 billion. It was at 1.1 billion US dollars, up from about 629 million US dollars. Again, on an adjusted basis, roughly a 50% growth. Customer base at about 53 million, and we had more than 2 million a quarter in Africa today. I think overall, I feel it was an extremely important year in Bharti's history. We believe we now have all the building blocks in place to enable us to go for the more, the data growth in the markets where we are. We have made massive investments for future, whether it is in 3G or in 4G or in Airtel money, both in India and Africa. They are both, to our mind, on the threshold of a data revolution. And I believe we have made all necessary investments in all forms to enable this. However, on the flip side, as you are aware, this was perhaps the most disturbed year in India on the regulatory front. The uncertainties not only continue, but they are huge. And I do believe that the performance we had in 2011-12 is very clearly a performance, the efforts and the investments we made this year. We enter the next year as a very fundamentally strong player. We are poised to grow and exploit the massive potential in India and Africa. However, as you can imagine, this ability to make large investments that will be required for this, not only on our part, but the entire industry, is obviously going to be dependent on the outcome of the continuing debate on the recommendations. It's our hope, it's our prayer that the government is going to take necessary decisions which are going to be pro-customer, pro-industry, and which will enable the industry to fulfill the common dream of industry and the government to take telecom, not only just data, but also voice, deeper into the country and enable the inclusive growth. I am hopeful that the coming year will be as exciting as the Indian telecom industry deserves it to be. Thank you. Sanjay?
Yeah, thanks Akhil, and a very good morning to all of you. This has been yet another quarter of sustained operational and financial performance in India and South Asia. As you are aware, in the last 2 quarters, we've been busy correcting some structural defects and also rate increases, and this gave us the headroom to reinvest these increases back into the market and consolidate our market position and move the volumes upwards in this quarter. And that's something that Akhil spoke about, and I will speak about as I progress. We ended the quarter with revenues of rupees 134 billion, with a growth of 2% quarter-on-quarter and 10.5% year-on-year. Business added incremental revenues of rupees 2583 million, and the annual revenues have now crossed the US $10 billion mark. Despite increase in the marketplace activity, our EBITDAs have expanded, which is the EBITDA margins, by almost a percentage point this quarter, and we have witnessed a 6.1% sequential growth in the net profits this quarter to 13.5 billion. Revenues for mobile have grown by 3.3% quarter-on-quarter, and on a adjusted number of days basis, which is EDB, it is 4.4. This is the highest in the last 4 quarters that we have achieved. Now coming back to the growth, this was all at the back of 5.6 million customers going up. Our total base is now 181 million on the mobile side, and we have increased the tariffs over 11.2, increased the traffic by over 11.2 billion minutes during the quarter. And also, if you look at the mobile number portability, we added 1 million net mobile number ported customers onto our network, which is the highest added by any operator since the inception of MNP. Some softness in rates because of hyper competition and pricing pressures. And like I said, we were investing back into the market on a year-on-year basis. Still, we see a 1.3% upward movement in the rate. And we've gained from 43.3 paisa to 43.8 paisa as compared to Q4 of last year. MOUs per customers have increased for the first time in the last 7 quarters, and therefore the rate drop that we experienced has given us the positive fillip on customer consumption. And today, the minutes of consumption have increased to 431 minutes from 419 minutes in the previous quarter. ARPUs have increased for second consecutive quarter by rupees 2. And they now stand at 189 rupees from 187 rupees in the last quarter. We launched LTE, something that you heard from Akhil earlier, with over 120 million internet users in the country and third list in terms of the Facebook use. It makes us the third largest internet country in the world. And with 43 million Facebook users, we are the second largest in the world in terms of Facebook. India is absolutely set and well poised for a data revolution in the coming quarters and years. To leverage the growth potential of broadband, we continue to invest in 3G. We are now present in over 1,100 cities across the country and now have over 9 million provisioned 3G customers, with 30% of them being active customers at any point in time. Total number of internet mobile users on Airtel network are 35 million and growing. In fact, 3G is the fastest growing line item in our revenues streams across the entire portfolio. We also launched Airtel Money, and you're aware of that. This was the semi-closed wallet with over 300 towns, 20,000 retailers, 7,500 merchant establishments. Let me quickly touch upon telemedia. We said that this is a fundamentally strong business on EBITDA margins, and we will come back to it. You saw a blip in the last quarter. I'm happy to say we've grown 2.2% points on the EBITDA margin, and this business will get back to the 42-43% margins it always deserves. It also sequentially grew by 0.3% on the top line. As far as the enterprise services is concerned, we actually have now branded the enterprise services as Airtel Business. I'm sure many of you have taken cognizance of that. And this is, again, reinforcing our commitment towards creating a solution-based corporate and enterprise service group within Bharti Airtel. Let me come down to DTH, which has grown 7% quarter on quarter, and ARPUs in this business have improved quarter on quarter, and this is at the back of the high definition services that we are very proud that we take a leadership position in. Overall, a satisfying quarter. The growth in minutes and customer additions have returned, and I think Airtel is back into the mark-to-market game going forward. Thank you, and I hand over the mic to Manoj to cover the Africa piece.
Thank you, Sanjay, and good morning to all friends from media. Once again, back from Africa to you with very satisfying year and satisfying quarter. This year has been a year of stable growth, both revenues and EBITDA margins. Year when we have completed our restructuring, our new business model introduction in Africa, and we are heading towards the next year of normal growth, where the restructuring is over, where the business model is now stabilizing, and we are consolidating all the changes we have initiated in Africa. Let me first talk about the quarter. The quarter has been satisfactory. It really had three major highlights. One, a huge strike in Nigeria market. As you know, Nigeria is our biggest market. It had 9-day national strike, which really hit all the industry players. We also had seasonality in Anglo markets, which affected the growth, and of course some network issues because of transition to our network partners. But despite all these issues, we were able to show a healthy growth, and let me assure you that on revenue market share basis, I'm sure this quarter Airtel would have gained over its large competitor. On mark-to-market basis, as you know us, we always are gaining market share. In the last year, we have gained about 2% market share in various African markets. In the quarter, we launched the 20th country for Airtel, which is Rwanda. That's a new license we got. That's the third license in Rwanda, and we launched it in record times of 83 days, and the business has already picked up within the last 30 days, picked up very well. We also launched 3G in 5 more markets in Africa, taking the total score to 7 countries, and Airtel Money in 3 more markets, taking the total countries to 8 countries now, and all countries will have 3G and Airtel Money by September this year. Let me talk about some other details of the quarter. 53 million customers, 2.1 million added this quarter, total 19 billion minutes on the network. At the end of the quarter, we nearly had 15,000 sites with 4,500 sites co-located and 16% sites shared. So sharing is improving, infrastructure sharing is improving in Africa, both in sites as well as fiber. The revenue was 1,071 million with a growth of 2.6% on local currency basis, and annual growth of 21.5% on local currency basis and 16% on dollar basis. The good news is that the non-voice revenues have grown nearly by 28%, which clearly means that Africa is showing good positive propensity for 3G, data, music, Airtel Money, and other non-voice services which we have introduced. Also, our OPEX efficiency, our operating cost efficiency is improving. Our OPEX is stable, which means as the revenues grow, the EBITDA margins will also grow very well. In this quarter, we have shown a EBITDA margin growth of over 1% over the last quarter, which is a healthy growth, and over the year, 33% growth in EBITDA overall. On CapEx, we spent about 1.5 billion this year, and we expect that next year we should be able to spend about $1 billion in CapEx in Africa. Finally, we are confident that this year will be a year of robust growth, both revenues and EBITDA margins. We are committed to growth of our revenues to $5 billion, and in all countries, we are committed to grow faster than our competition. Africa has been a great decision for Bharti, and I'm sure it will deliver to the dreams and expectations of our investors also. Thank you.
We open the house for questions.
Can I just take this question? This is regarding the CRBI report.